Hello everyone, this is Jim Martens and today is Wednesday. It's April 27th, coming up on 2:30 p.m. here. Taking a look at both 30s and 10s real quick intraday. Just wanted to highlight this move in 30s, this recovery that started earlier this month. Notice right now it is in three waves, and notice it has retraced 38.2% of the proposed wave 3 decline, and it is testing deep into the area of the fourth wave of one lesser degree to 143.21. Now, I always point to, after an impulsive move, I always point to the area of the fourth wave of one lesser degree as a possible support, or in this case, resistance area, particularly its endpoint. And that's particularly true when the recovery itself is a fourth wave, which is how we're viewing this current recovery, as a fourth wave. So this is the time to pay attention to how the market acts. And we can see that from within that narrow band between the 38.2% retracement and the end of the fourth wave at 143.21, the market has turned lower. Now, the turn is not in five waves, so it's premature to conclude that a downturn, that wave 4 is complete and wave 5 is underway. But we have to say that the market has reversed course from an area that we would anticipate a turn would occur. So now it's all about trying to gather evidence that wave 5 is underway. Notice also that wave C, if we count it complete, and we can do so maybe as an ending diagonal, if that's the case, notice that wave C traveled just a bit longer than wave A. It's just another target that falls very close to the 38.2% retracement target and resistance to the end of the fourth wave. So we actually had three levels calculated in different ways, so they're unrelated, that clustered in a fairly tight area, and that's where the market went to, and that's where it's been struggling. So we are watching carefully for further evidence. Now, ideally, we'd see a decline in five waves from 143.09, and then that would be followed by a three-wave recovery to a secondary high in a correction to complete an impulsive decline corrective recovery sequence, a reversal sequence. But we'd have to wait some time for that, perhaps. So immediately what we can look for, though, is a break of the lower boundary of the wave 4 channel. Currently, that lower boundary is crossing about 141. So, we're approaching it. A break of it would likely favor the idea that the decline from 143.09 will continue until it is five waves, and that a reversal to the downside is underway. But we could be getting ahead of ourselves there, but that's what I'm looking for next, a decline beneath 141, that lower channel line. And of course, after that would be the end of the wave B around 139.09, but that's not far off from the end of wave 3, which would be the minimum objective for a fifth wave decline. So interesting times in 30s. We need to pay attention here. This could be the resumption of the move down, which is a move higher in rates. Now, if I were to look over at 30s, based on the way we've counted the rise, A, triangle B, and then an ending diagonal C, the market's far from breaking the wave B low like we saw in 10s. But what we have in 30s that we don't have in 10s is what looks to be a five wave decline. Now, it might need one more little wiggle down at the end here to finish five waves in the fifth, but the decline from 143.09 certainly does look impulsive, which means the trend is turning to the downside. Now, this is a bearish signal, but I don't want to turn bearish here because the completion of a five wave move should set the stage for a corrective recovery. That is a rise that ends, one, after three waves, two, no higher than 143.09, and three, more likely in the area of the fourth wave of one lesser degree up to about 142. So if we see a three wave rebound, up into resistance or just above and it stalls out, that's going to be a correction that completes a 5-wave decline, 3-wave recovery sequence that I like to refer to as a reversal sequence, and that will set our targets on the prior low in 30s at 138.14. So yes, as I wrote yesterday, interesting times, and they're getting more interesting as time goes by.